What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 31st of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we're not only going to be talking about the current macro environment as the dollar is at its weakest level in over 2 years as the Fed continuously prints new liquidity into the market, but outside of it as well, why it's fueling the rally that we're seeing in cryptocurrencies as well as commodities. And at the end of the video, we've got a sponsored interview with Mauricio from Ledin.io, so stay tuned for that. You won't want to miss it. All right, let's go ahead and dive straight into it, guys. General crypto market is looking relatively positive. We not only have Ethereum and Bitcoin in the green, but along with that as well, the vast majority of the market in green territory, slightly outside of neutral territory at the moment, with a lot of leaders like Bancor, Chainlink, VeChain, Oregon, and many other different types of plays on Ethereum doing very well. Now, I want to go ahead and first start off here by talking about the macro environment that we're in. So right now, if you're taking a look at some of the major weighted indexes here for the US dollar, we can actually see that for the first time in a very long period of time, we're actually entering into a very bearish trend for the dollar. This is very contrary and different comparative to the narrative that was being shared back in March when there was the crazy shock to dollar liquidity across the board that led to crypto having one of its worst sell-offs, equities having one of their worst sell-offs. Everything was down basically across the board of the market. But now we're getting into this point now where the Fed has been injecting capital at a record rate. They've brought back interest rates down to the historic level of 0 to 0.25% or 25 basis points, basically practically free capital or liquidity for commercial banks. And now we're starting to see a shift from the kind of shock of dollarization to really actually a mass injection of new liquidity. We can see here, taking a look at the dollar index, this is what's known as the DXY or the US dollar currency index, a weighted measurement of the dollar against other world currencies, whereas we had been in a bull market going from 2018 all the way up here to March of 2020, we're actually seeing a bit of a reversal now. Now, this doesn't mean, again, that there's, in this case, that the dollar at the end of the day is not worth something. It's not still the world reserve currency. It is right now. But we're seeing a paradigm shift, one of the biggest pullbacks we've seen since back here in 2017, at an even more faster sell-off rate than what we saw back here. Right. Taking a look at the daily, we can see day by day here, the dollar index is continuously going down lower. And we've talked in the channel what this means. It means that people and the market in general are anticipating that the Federal Reserve is going to keep printing money, it's going to keep buying financial assets, and it's also going to keep interest rates not only low, but most likely explore negative interest rates very soon. And that dynamic is going to be extremely disruptive. Now, why? It simply is going to be disruptive because when we start to enter into negative interest rates and we start to enter excessive amounts of printing of money, having money in a savings account, having money in government treasuries, and a lot of the safe traditional investment vehicles that people have relied on for the last century are going to be tested to their ultimate level. You are going to be penalized to a large degree as interest rates continue to go down. Some banks might still pay an interest rate to where it's not negative and doesn't penalize you, but it's going to be practically nothing. And along with that as well, you're not only not earning anything on your money, you're getting absolutely depreciated by the Federal Reserve's mass amount of printing. And this is what we've seen, a record inflow into asset markets, new retail participation, everyday people getting involved in investing in stocks and other types of assets. But I don't really want to focus on the stock market. The stock market is heavily overvalued right now. It's at all-time highs. As a macro trader, I'm looking for the emerging sectors. I'm looking for the sectors that have opportunity and are going to really benefit in an environment of mass dollarization. So many of you might be wondering this simple question: why is it that I'm so bullish on cryptocurrencies as a sector of the market in an environment where there's mass dollarization and printing? Aren't all assets going to do well? Yes, it's likely that the vast majority of assets are probably going to do well. But cryptocurrencies are a gem in this broad space of the macro environment. And I'll explain. There's 4 reasons why this is very true. The first thing here is that we have a market that isn't at all-time highs and isn't excessively overvalued. Cryptocurrencies, compared to, say, equities or property markets or bond markets, really isn't at all-time highs right now. And for us, that's really exciting. Same goes here, against even precious metals. Gold is at an all-time high right now. We want to find markets here that have room to expand back to those all-time highs and eventually continue onward, much like many other assets are already doing right now. Second thing as well that's important to take into mind is market to scale. So as many of you know, if you watch the channel constantly, and if you don't already, you should definitely hit the subscribe button. But one point that we always bring up here on the channel is market to scale. So it's much easier for Bitcoin at a $200 billion valuation to double to $400 billion in the next year than it is for the entire global equity market at $100 trillion to go up towards around $200 trillion, right? It's markets to scale. Things on the smaller end are much easier to move higher. The third thing here is that we have to consider that cryptocurrencies and digital assets are the ultimate hedge, right? You not only have limited supplies in the sense of the monetary schedule for some of these cryptocurrencies that are fixed and finite into the protocol, but there's also finite monetary schedules, meaning like, for example, on Bitcoin, there's only going to be 21 million coins ever in existence. And Ethereum is slowly moving towards a monetary policy that's much more fixed as well. This is really great. It makes crypto an ultimate hedge, whereas gold, for example, can have 1% to 2% inflation annually for the last century, right? It's been continuing to have an increase in the supply as there's new gold mined. And the last component here is the fundamental technological revolution that cryptocurrencies are bringing right now. Ethereum just turned 5 years old yesterday. And over the last 5 years, there's been a lot of failed experiments. Like any great technology, we had the ICO bubble where there was rampant speculation, a lot of money raised, and little to nothing delivered. But at the same time, as much as we had this kind of crazy wave of development on Ethereum, we had many hacks or problems with the smart contracts on Ethereum. What we've come to now is an environment where Ethereum has found its niche, it's found its product, and that is decentralized finance and actionable building of enterprise blockchain. So these two value propositions are finally coming into fruition here. And we can start to see that being reflected. The vast majority of Ethereum addresses are now entering into profitable territory as Ethereum has continued higher here. We can see here, clearly looking at the chart here, the market is starting to price in excitement around Ethereum. The long-term dollar chart on the logarithmic chart, we can see here that we are building into a long-term wedge. We broke out, made that line of resistance, support, and we're now torpedoing off to higher levels here, higher relative highs to what we set back here more than a year ago, back in June of 2019. This is incredibly exciting, guys. And just in the sense of the price action, the fundamentals, it's proving that everything's coming to the culmination here. Bitcoin as well, showing very similar price performance. It's just that this time we just were holding up against the resistance, and now we've coiled up, we've popped up here, and now we're up towards $11,100. The first time since 2017, since we've broken up above that line of resistance. Litecoin as well. Similar pattern here. We saw what happened with Ethereum and Bitcoin and altcoin dominance and all the different metrics where we were building up these wedges. What do you think is going to happen this time around? We're really not that far away from breaking past this. We just need to really get above $70, another less than $14 here for Litecoin. It's already come up from around $40. I think it can do it, and I think it's going to continue to climb through. XRP as well, again, not a massive fan of the project. Looks like it's building a very similar technical pattern on its USD chart compared to where it was back here in the summer of 2017. So all in all, guys, this is looking incredibly exciting. The overall market right now is fundamentally shifting upwards as we are entering into one of the most interesting macro environments we've seen in a very long period of time. Now, we're going to be talking a little bit about more of this as we go throughout the next few days and weeks here on the channel as we continue to talk about the macro environment. We always do. But I want to go ahead and dive into this awesome interview with Mauricio from Ledn.io, where we not only talk about Ledn as a company, but outside of that as well, get a perspective from Mauricio, again, on this kind of growing process in crypto markets. So without further ado, guys, let's go ahead and dive into the interview with Mauricio. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with Mauricio, who's one of the co-founders of Ledn.io. They've not only been one of our long-term partners here on the channel, but have been following Mauricio and the team's journey as they've been trying to continue expanding out the deposit as well as borrowing sectors of the cryptocurrency space where you can, for example, earn interest on your cryptocurrencies, and on the other end, use your cryptocurrencies as collateral to borrow stable coins as well as dollar loans. So gotta say, Mauricio, it's awesome to have you on here, man. We've had a lot of conversations about Venezuela, what Ledn's doing in the region, as well as other parts across the world. I'm curious to hear, man, what are things up to in regards to Ledn right now? How are you guys doing?
We're doing great, and thanks for having me on, Nick. As always, a pleasure to be here. I guess the most recent updates that we have on our side is we recently announced rate increases for both of our savings products. So the new interest rate in our Bitcoin savings account is now 6.5% annualized APY. And the interest rate on our savings account, USDC, is 10% APY. So those are now the highest rates in the industry for both Bitcoin and USDC savings accounts. And in addition, we thought this year had been unpredictable enough. So we wanted to give our clients the benefit of knowing when these rates were going to be available until. So we're actually going to hold these rates until December 31st of 2020.
That's incredible, man. So I know, speaking to that, I mean, not only is 10%, according to at least my understanding, or according to LoanScan and a few other the data metrics out there, that's going to be the highest rate on the market. And if you guys can actually hold that up until December, basically towards the end of this year, that's going to be pretty incredible. I think it's a pretty good selling point for you guys. And the great thing about it too, Mauricio, is like, with these crypto deposit pools that you guys kind of fit into this category of new crypto companies, the great thing is that there's a sense of transparency there. You can always take it from one perspective. You can take it from the depositor side. You can see it from the borrowing side. And you can see you guys charge generally around 12% on the borrowing side. And in this case, you're able to pay that 10% to the depositors. And all in all, man, it's awesome because for me, the biggest thing I want to see in this space, and I think you get this with Latin.io, is that we're going to see a squeeze of basically the margins that these companies are going to be making. And in this case, you're giving better rates to the depositors in this case, which at the end of the day is what I want to see, man. I want to see more yield coming to people. So I think you obviously share that vision as well, working on what you've been doing for the last few years.
Yeah, absolutely. And I guess part of what enables us to do this really is our collaboration with Genesis. So Genesis being the top counterparty, institutional counterparty in the space, they have access to essentially great deal flow and great rates. So we work with them to get our clients the very top that institutional borrowers can pay. And we then work very hard to pass through as much of that interest to our clients as we can. So not only do you get really the best rate in the market, but you're also getting it in the most transparent way in the market. So Ledn is the only lender that actually states who the borrower is, institutional borrower is, of our digital assets. So that's a big thing for us, because we like being as transparent as we possibly can. And we know clients want to know where their funds are at all times. So we work very hard, and our relationship has been working amazing, which allows us really to keep improving our products. So we expect to continue doing this.
Yeah, Mauricio, I mean, honestly, man, better rates and then more transparency in this case are going to play a big role in actually scaling this out. This market right now that we're in right now, the industry that you guys are working in, I mean, crypto as a whole is still relatively small. And I think we're all pretty much in agreement that over time it's looking like it's going to accelerate and keep growing. But the same goes here for centralized finance, decentralized finance, and especially, I believe, this ability to earn higher rates of interest as people are chasing yields across the world. So I'm curious to hear a little bit about your take on this, Mauricio. Obviously, you talked to me a little bit beforehand and stuff. You guys said your business is doing great. People are going crazy over the B2X program where they can double their Bitcoin exposure along with that as well. Obviously, the new stablecoin deposit product has been really exciting as well. I'm curious just to hear your thoughts now with these kind of increased rates. Do you think, as you guys have committed to doing it towards the end of the year, do you guys think you'll be seeing 10% remaining for a longer period of time? And do you think that there's just going to be this constant new wave of demand that it's going to be hard to fulfill as we start accelerating into a more upward market?
Yeah, so there's a few things happening, and those dynamics create opportunities in the market. So the main ones that I see happening right now is Bitcoins are becoming increasingly harder to get your hands on, particularly in large amounts. Right? We have a few things happening at once. We had the halving, which basically halved effectively all the Bitcoin that gets paid out to miners. That puts some constraint in the amount of Bitcoins that went to the market every month. And in addition to that, we have funds like GBTC who are essentially taking in a lot of Bitcoin to be put into this fund. So there is a demand for Bitcoin. People that want to buy it on spot, and large institutions that want to start accumulating positions. Every time there is increasingly less Bitcoin floating around. And so that drives up prices and drives up demand for Bitcoin. As that happens, Bitcoin price goes up. And what that creates is a lot of demand to borrow dollars to buy more Bitcoin. So it's basically it's one thing feeds the other. And if this continues, where I see with the current macro backdrop that we have, there seems to be a huge push towards dollarization and digitization. Uh, both of those paths lead to Bitcoin. And so I do believe that we're going to continue seeing a lot of enthusiasm around digital finances because they do open up a lot of doors for people, particularly outside North America. And so it is a trend that's going to continue happening. And our job is really to make sure that our clients are benefiting the most from these opportunities, because we're always going to go to the institutions, get the top rates that the borrowers can pay, and we're going to work as hard as we can to pass on as much as we can to them.
Yeah, actually, Mauricio, I was going to say that I think one thing that you have as a benefit as a company, especially coming from your leadership role, is that, I mean, you understand what's going on in areas like in Latin America, specifically in Venezuela, and a lot of other markets out there. As you mentioned, the trend of dollarization is massive. It's continuously expanding. It's almost kind of like a virus, how its, dominance on the world has been playing a larger and larger role. Outside of that as well, the digitization of currencies. So now people are really willing to take this next step to digitize currency into the form of stable coins so they can get these kind of opportunities and enter into these new financial plays. And as you mentioned, it's a cyclical process. As the market gets bigger, there's more people who want to basically take margin positions. There are more exchanges that need more liquidity, or basically stablecoin liquidity, in order to keep trading pairs liquid. And that sets the borrowing demand. So as the market grows bigger, the demand for stablecoins and Bitcoin grows bigger as well, as you mentioned. And I think what we saw post-halving was just kind of sideways price action, whereas we usually saw corrections after the hype wave into the halving event. So it kind of proved to us that, this was inevitable. This is coming very soon.
Absolutely, absolutely. And I guess one other thing that I just got reminded of, as you mentioned, just broadly Latin America. As you know, we're very much focused on bringing Bitcoin products and digital finance to the people we feel need it the most. And so as part of that, actually, something that we're very, very excited about is that our website is going to be fully live in Portuguese, actually,
Really?
as of tomorrow. And that opens the door to millions of new clients to now learn about Bitcoin and access the best, really what we consider the top tier financial services in Bitcoin in their language, because that's something that to us is very important. Bitcoin is a global currency and it should speak a global language. So everyone should be able to interact with Bitcoin in the way that they are most comfortable. And what we are trying to do is really every time, as best as we can, bringing down those barriers so that people can come in and feel more comfortable.
Mauricio, that's awesome, man. I think people don't understand just how big a market Brazil really is. So being able to have Portuguese is going to be awesome for you, especially with the establishment that you already have, for your company with Venezuela and Argentina, a lot of other regions. So very, very excited to see how that goes for you guys. Congratulations on that. So just for people who might want to, again, get engaged with Ledin, I'm assuming the best place to go, and we'll leave a link down below in the description for anything relevant, but I'm assuming the best place to go to is ledin.io, which again, we've got a link to the website for in the description.
Yeah, you can check us out at ledin.io. You can also follow us on Twitter at Hodl with Ledin. And we're always around if you want to ask any questions. We're pretty friendly.
Awesome, man. Well, I know for sure you guys have been really awesome to work with, and I'm really excited to see where Ledin's going to continue to go over the next few months. I think, as you mentioned, man, the macro environment is phenomenal right now. If people aren't watching what's happening with crypto, with precious metals, and what's going on really on the ground in a lot of countries, I mean, the liquidity movement that we're seeing right now is going to be something that I think we haven't witnessed in the past century. So, Mauricio, so happy to have you on, man. So happy to hear you guys are succeeding and growing as always. And we'll have to have you back on here soon on the channel.
Absolutely. It's always a pleasure, Nick.